Hello, everyone. I'm Clark Cahill, Events Manager with the South China Morning Post. Thank you all for being here with us for our final segment of our COVID-19 and the economy series. For our last discussion, we'll be asking our panelists if Greater China property investment will rebound after COVID-19. Our panelists for this session are Jianping Chen, who's Vice President at Credit Suisse, Donald Choi, the Executive Director and Chief Executive Officer at Chinachem Group, Ellen Ng, who's Managing Director and Head of China Real Estate for Warburg Pincus, and Ada Wang, the CEO of Champion REIT. This conversation will be moderated by our SCMP property editor, Sandy Lee. Before we begin, we'd like to give a big thank you to Credit Suisse for sponsoring the COVID-19 and the economy series. I also want to make sure our audience is aware that we would like to encourage you to submit questions to the panel. You can do so by using the Q&A function at the bottom right corner of your screen through the WebEx platform. You can submit your question at any time during the discussion, and we will do our best to get your questions answered by our panelists in the amount of time we have. Without further ado, I will pass things over to Sandy to dive into the discussion.
Hi, good morning, everybody. Nice to have all of you early in the morning. So, and because when we talk about Hong Kong, the property investment market remains subdued in the fourth quarter as the local and the foreign buyers just stay on the sidelines. So, and then Jianping, can you just tell us what is the overall investment market right now?
Second half of last year, and also the COVID-19 spread for the so far for this year. And now, because even though that we have seen some improvement in Hong Kong now, but as we can tell from the experience in mainland China, it takes time for the real economy to recover, right? For example, for the mainland China, the government has already got the COVID-19 situation under better control since end of April. But if you look at the macro data, the retail sales still recorded the negative year-on-year decline, although the magnitude has already been narrowed substantially from around like negative 30% for the first 2 months of this year versus around like 1.1% in July. But still, if we're comparing to the previous momentum of around like 8 to 9% positive growth rate, we are still like, it takes time for the retail sales to recover. And also, I think this situation also applies for the other industries. So I think that for Hong Kong, so far, I think as I've said that the situation has improved, but it takes time for us to see the real economy to record much better recovery or improvement. So overall, I think that from the investor's perspective, the sentiment has been still in the like the bad situation now.
So, Ellen, what's your view on the overall investment now?
Thanks for the question, Sandy. Look, I cover China, so we've been a very thesis-driven and long-term investor, a long-term sort of hold in that market. I think what we're seeing in Q2, China is back in full swing, fully back in business. In Q2, we actually see more investment into China, in contrast to some of the other markets across the region. Part of that is probably delay from Q1, which was a dysfunctional quarter. But you do see both Chinese institutions as well as foreign investors piling in and making pretty big investments in Q2. In the longer run, our view is there are a lot of opportunities in some of the underserved segments, particularly around logistics, cold chain, data centers, industrial. Some of these secular trends have actually been accelerated by COVID. And then, it's a big sector in other segments. It's probably going to take a bit more time to recover.
So Ada, your company is holding some commercial properties in Hong Kong, just like the Free Garden Road and the Lancome Place. So, and then, what is the overall sentiment about from the tenants and then any other opportunities that it is worth for acquire at the moment?
Sure. I think for Hong Kong office, well, maybe it's there's also a later question on this as well. There are questions about like whether the foreign companies or the foreign financial institutions will move out of Hong Kong because of the security law or because of the social unrest, right? But so far, for all the MNCs in my portfolio, actually none of them are going to move out. Like there could be funds that are not doing so well just because of the general markets that are closing down or downsizing because of cost cutting. But I think that office like in the near term, like there is some pressure because everyone is just like we figuring out what is going to be their long-term real estate strategy for office space, especially with all this work from home. Do they need so much space? And like with the new social distancing measures, they need to actually put more space in between desks right now. Because like so far in Hong Kong central office, especially the most expensive office space in the world still, the per capita office space is around 60 to 80 square feet per person, which is like definitely not enough to get that like 1.5 meter to 6 feet social distancing. So that's why I think maybe quite a lot of, especially for global company, they may have a global policy of the distance between desks. So that could actually be one of the driver for the office demand as well. And for the retail space, I think retail is like definitely it's related to tourists and also related to the lockdown. In Langham Place Mall, our percentage of tourists has been around 20 to 30%. And just over last weekend, when the social distancing measure relaxed to 4 people per table, our footfall at Langham Place on Saturday is already back to 20% down year over year. So that means that pretty much everyone is dying to come out. We are just missing the tourist part. But definitely the spending is not back to what it was before. I think people are a little bit more cautious of the economic outlook. They're not certain about whether they can still keep their job or not. But still, I think for F&B or all this discretionary spending, as long as the knockdown is removed or the social distancing measures relaxed, then people are actually willing to come out and spend.
Oh, that is very encouraging. So, and then what are the strategies? Hi, Donald. Oh, you're back.
Hello.
Hi, Donald. Can you hear me?
Yes. Can you hear me?
Oh, we just discussed about what are the overall property investment sentiments in the market right now. So, and then your company is also holding a lot of residential, retail, office, industrial buildings. So, can you just tell us about what is the latest development?
Right, sure. I think obviously the Hong Kong's economy has taken a big hit in the first half of the year, and it has contracted quite close to 10%, and also the unemployment rates continue to be high at 6.1%. I think Ada and other speaker has been right in the sense that the office market, especially in Central, they are really seeing pressure because of the increased occupancy vacancy rate. But we must also take into consideration that despite the price drop, I think it is still one of the highest rental in the world. And actually, even before the COVID, I think we are the market is actually anticipating correction. On the retail side, the overseas visitors, have been absent in Hong Kong, and we really need to change the strategy to, encourage the local consumption. And again, I think, the local residents, they are eager to come out and spend. So we are seeing some increased activity in that area. We do see that there are a number of expatriates living in Hong Kong. That is reflected in some of our residential leasing portfolio. But at the same time, we do see actually mainland company coming back in. And recently we have some very large residential rental concluding, and they are over $300,000 per month. So we do see, there is a replacement of the very high-end luxury rental market, despite some expatriates they are living Hong Kong.
Oh, okay. So and then during the COVID-19, there is a tightening of the social distance measure, and then lots of people stay home and work home, and there is everybody will see that there is a little bit change in the people's spending behavior. So most of them maybe they just do more online shoppings, and then just maybe just to order takeaway food. So in this in coming months or years, and then Jiangping, do you think that maybe because the change of the shopping behavior, then all these developer and then the owner of shopping malls and then the office landlord, so what kind of strategies that you think that they should just use in during these uncertainties today and in the near terms?
Well, I think that you mentioned about the changing of shopping habits, especially for the online spending. China has already, mainland China has already experienced for the shopping mall landlords, they have already seen the pressure since like 2010 when the online shopping recorded a strong expansion. But for Hong Kong, I think it's a bit like a special case because in Hong Kong, the delivery capacity is actually the problem in reality. It is difficult to change in the short term. And also, I think that the density of shopping malls is actually much higher than that for the mainland China. So I'm actually do not like see a very substantial pressure from the online spending versus the real demand for the shopping malls. And then in terms of the investment strategy, I think this is actually related to the long-term perspective, right? Because in the very short term, we do have like some unexpected issues, positive or negative, but we actually measure our decision making from the long-term and the medium-term perspective. In this regard, I think that Hong Kong's economy remains largely intact, right? Especially two of the four major industry drivers remains intact, and this will actually serve the long-term driver for the Hong Kong economy, and then serve the support the demand for the office and the retail properties. So I think that in the very short term, because especially for the COVID-19, I think some experts also highlighted the potential risk or potential outbreak in the winter season. That may actually exert some pressure here, but well, maybe timing-wise we can be wait for a while. But from the medium-term perspective, I think it's or at least it's timing for the investors to keep an eye on the potential opportunities if they do not trigger to pull the trigger immediately.
How about the Donald? And then do you think that the change of the consumers' spending behavior, and then as a landlord in Hong Kong, so do you think that there is to be a change of the structure between the landlord and the tenants?
I think the social distancing is going to become the new norm. Therefore, I think both tenant and landlords they need to find new business model. Apart from the fixed rent, obviously, I think the landlord is much more agreeable to turnover rent nowadays. Just keep the tenants in their mall, and hopefully that we can together face the challenge. But again, I think people are still looking for a very personal experience. That is something that may not be available from the takeout or online shopping. And for Hong Kong, I think really we have also potential of once the cross-border traffic reopen and the domestic consumption, especially from the mainland visitors, they will come back. And those actually will not be just online shopping, but actually, for the Greater Bay Area residents, they would come to Hong Kong, experience, the Hong Kong as a vibrant city, enjoy the experience that they could gain. And again, I think this is where I think we shouldn't just look at Hong Kong still, of a market of 7 million. Eventually, we are going to have the Greater Bay Area market at our, disposal, and that is the, I think, good optimistic, way forward.
So Ada, do you think that right now more people just go for online will also affect the sales of your shopping mall?
Well, I think, relatively, for Hong Kong, because of the living space, right? And everyone, there's pretty much like one shopping mall at every single MTR station. So on their way back home, they will pass by a shopping mall. So, so far we still see, despite COVID, the online shopping penetration rate is still not as high as the rest of the world, just because of Hong Kong's, infrastructure wise and a lot of very small residential units. And that will continue to drive the retail demand in the physical space, because you cannot. Can you still hear me?
Yes.
Yeah.
Yeah. It's
okay.
back on.
Yeah. So I think for Hong Kong retail in the short term, I agree with Donald that is very challenging. All landlords are trying to keep the tenant as much as possible. In the medium to long term, the Hong come out. It's very hard to stay at home all day long, no matter how spacious your home is. And I think just because of the space and the living environment in Hong Kong. So I think physical retail in Hong Kong will be will still be there in the medium to long term.
So Alan, and then because and we also just find out that the logistics sector is become a spice spot because of the increasing e-commerce in Hong Kong and in China. So what do you think about this sector?
So we've been a very active investor behind logistics in the past decade in China and across the region. And the secular trend is very compelling. I think COVID has somewhat accelerated it further. If you think about people who were uncomfortable with e-commerce, maybe the older generation before, or people who had never experienced online grocery shopping, were all of a sudden forced to adopt new ways of procuring, the daily supplies. So if you look at some of the grocery online apps download that in China, those have tripled or quadrupled in the first half of this year. So again, that creates a new wave for additional fulfillment centers, additional warehouses. But it's a secular trend that has been playing out, over the past few years in China. Again, I think coming from off a lower base, China in general did not have any legacy infrastructure or stock, and as such, those type of trends from offline to online happen much more faster than in other parts of the region.
Oh, so and then that sector, will it be just outperform the other kind of a sector like office, commercials, hotel?
I think it's different in different scale. The traditional food groups and real estate are clearly traditional offices and retail, and logistics has really moved from a more niche segment 10 years ago and is evolving into a larger food group on its own. So I think there is a catch-up factor at play where a lot of the institutional capital, they already have significant exposure to the traditional food groups, and they're now playing catch up to newer segments, such as logistics, as you pointed out, as well as stuff like data centers, cold chain fulfillment. So it is sort of in the catch up mode.
Okay. So, and then another one jumping, and then do you think that right now, there is the rising tension between the U.S. and China, and there are lots of the introduction of the national securities in Hong Kong. And then do you think that maybe, do you project that maybe there's some foreign companies, they were concerned about the outlook in Hong Kong? So, and then do you find out that there may be expect some of them maybe just scale down or just leave Hong Kong?
Well, I think that maybe some of the foreign companies may choose to leave Hong Kong for whatever the reason is. But I think that for the most of the multinational companies or for the larger scale companies, I think it is difficult to imagine that they will give up the market size in China that consists of like 1.4 billion of populations. And bear in mind that the urbanization ratio in China continued to expand. That will actually translate into the rising population with better affordability. So for Hong Kong, I think it will remain serve as the gateway to mainland China for the foreign companies to capture the potential demand in China. So in the short term, maybe there is some concern, but from the medium term perspective, I think that Hong Kong will still resume the order as it before and can offer the one of the best operating environments to all the companies in Hong Kong here.
So Ada, do you find out right now maybe some of the negotiation was held up because of the COVID-19 or because of the political tensions?
Well, I think, especially for office space, if you are in Hong Kong, you have an office space, if it is up for renewal, then you still have to have a space, right? And I think, the office demand has been very slow since the social unrest last year. So it has been over 12 months already. And you cannot hold up the development of a company, like whether you're expanding, you're downsizing, you're leaving, or you're, one way or another. You cannot just hold up your decision for more than 1 year. I think, for all the business right now, they probably understand that, they still have to make a decision. Like, although some of the tenants, they may want to have shorter leases, or some of them may want to go to flat space, so they have more flexibility going forward. But still, business is business. The life still goes on regardless. And like, say, for example, in earlier this year, we renewed the leases for quite a number of years with like one of our biggest tenants in our office building. So I think that, although there are some smaller firms that they may opt for like, shorter leases with more flexibility, but, still, I think, real estate decision has to be made.
So how about Donald? And then you also have some new office building, and then what are the latest leasing situation, and what are the corporate tenants they're most concerned about?
Well, we do think that, as long as, the recovery is will be steady, then people would continue to have their operation stationed and located in Hong Kong. Not to mention some of the SOE and Chinese mainland company also is coming into Hong Kong. For tenants, obviously, when they see a steady future, they would like to negotiate longer lease at better price at this moment. So we do see that some tenants actually renewing their lease and getting better pricing for the rental, but they are committed in the market for long term. And I think also, since we are a developer, we also aware that the supply coming on stream, they are not really having a lot of new Grade A office supply in the near future. Therefore, despite I think the vacancy rate is going up at this moment, I think once the economy is back, again, having good quality Grade A office will be in demand again, and decentralization is also going to have an effect on Hong Kong central office space as well. But it is a more distributed market, which is good, I think, to ensure Hong Kong competitiveness. Because the Grade A office in Central is really expensive, even at this time.
So, Alan, do you think that about Hong Kong's investment properties, there is a more downside and then provide more acquisition opportunities for the foreign investors?
Look, I think Hong Kong has always been a unique market for investment purposes, given there are so many deep-pocketed families and groups in Hong Kong. And obviously, the events in the past 12 months have created some headwinds. But I think the long-term trajectory is still very promising, right? It has a very unique status. For our fund, because we're growth-oriented focus, we do have a co-living operator in Hong Kong. And the strategy there is to take advantage of selective hotels that have become obsolete or under pressure because of events in the past year and convert them into longer stay for rental products. And we think, this is a pocket where, off the back of, very extreme unaffordability of housing in Hong Kong, there is a product of institutional housing that would be needed in a market like Hong Kong.
Do you think that right now the hotel valuation is more affordable, or maybe just a lot less expensive as before?
Look, I think that's a great question. As with other markets, price resets do take some time to happen. So we've seen a lot of interest from institutional investors to trying to shop for bargains. But the reality is, so far, we haven't seen much closed transactions at true bargain prices. So it will be, a function of many moving pieces. But I think there will be, it's probably fair to say that there will be opportunities to reconvert some of the existing stock into, higher and best use, to use a real estate term.
Oh, yes, because we also have a story about that there is only one hotel transaction so far this year. So it looks like it is the negotiation for, there are lots of interested investors. They are just looking for big bargains.
That's true. We've seen that as well.
Oh, okay. So Xiaoping, can you just, if an investor who are just interested to invest right now, so in any particular segments that you think that investor believe more or attractive than the other?
I think that if we are looking at the pecking order, I think that the most preferred segment definitely on the residential side, because I think that it is actually well known to all of the people that the supply here, the residential supply here in Hong Kong, is an issue that cannot be resolved in the short term, right? And then the demand, although there is always been the discussion around the affordability, but still we have the low home ownership, and also the living space per capita is actually significantly lower than the other regions. So the demand-wise, I think that it is very promising. So from a demand supply perspective, residential can be better preferred by investors. Then the second or the higher interest is actually on the office side, because as Ada and Ronald have mentioned previously, right? We see a rising interest from the companies from mainland China. We see for some of the U.S. or Asia listed companies, most of them has actually chosen Hong Kong as their dual listing market. This will translate into more office leasing demand from these companies. We also see some transactions in the market. So then I think for the retail side, we also touched on that. There are some like the short-term headwinds, and it takes time for the retail sales to recover. But long-term wise, I think that if we like, so for some of the landlords, they may need to repositioning, like with more focus on the local consumption and trying to reduce the reliance on the tourism or the luxury end. But yeah, it takes time, right? This will be much of the structure change. So, and then for the hotel part, I think that the prospect is a bit challenging. That is why also we have seen like some of the top valuation here. Yeah, so that means like among the four major segments, our pecking order is residential, office, retail, and hotel.
Oh, okay. So Donald, then what do you think about it? If York as China came, and then it is more involved in buying land or any interest in buying existing property for redevelopment?
Yeah, I think both, good location, greenfield land for development, as well as existing buildings where we can add value. We are actually actively looking in the market. But again, as Jiping has said, I mean, there's not that many, lower than market transaction at this moment. I think, the market actually is still quite rational. There's no panic. Also from the investment side, it may not be for every investor, but I think it's a niche market that is worth looking at, is the industrial sector, where building could have opportunity to convert to other use. For example, data center, logistics, where the new economy actually is growing fast despite the present downturn. If you look at recent land sale in Hong Kong for data center, it was transacted as a price way above the market expectation, demonstrating, the need for this type of facilities in Hong Kong. So I think, as a niche market, industrial premises where it can tie up with the new economy actually is a very bright area.
So, but do you think that right now the supply of industrial land actually it is not enough, because the government they just mostly focus in the residential and turn most of the industrial sites into residential in order to
that is why I think government should have a balanced policy of land use, to ensure that Hong Kong is competitive in the future. We cannot turn all the lands just for residential domestic use. We must have a suitable balance of commercial, office, industrial, hotel, and so on. Again, land development, city development, we shouldn't look at just a very short-term solution. It really need to be looked at it from a longer-term perspective, 10, 15, 20 years from now, what Hong Kong as a global city need.
So Ada will champion with just consider diversify into industrial property market?
Well, I guess just because of Champion REIT's positioning as focusing on premium commercial assets like Grade A and core retail. So although like industrial is very, very attractive, I think that sector has like tremendous growth opportunity. But unfortunately, I think, just the mandate of the REIT, it doesn't really allow us to diversify. But maybe on the other hand, if you just ask me about like my investment priority, I think for office that will be a much longer headwind, just because like most of the office like the leases are relatively long, and I think the demand and whenever office tenant make a decision, it's not going to be made immediately, so there's always like a delayed effect. But versus if you looked at the retail valuation has dropped tremendously already. So like how worse can it be, right? So, and I think that, eventually people will come back out, COVID will be gone. Just from, a valuation perspective, then I would say, just compare office and retail, then retail would be a little bit more attractive.
So do you think about it? Because what I'm asking is that I have a friend and then she starts working from home since February for just more than 7 months. And then the company said that, oh, maybe just we will just go back to the office until we do not have any cases, any COVID-19 cases. That means maybe probably at the end of the year, then she will probably working at home. So do you think that right now more and more companies are working from home will affect the office demand?
Yes, if I just look at the footfall, going back to our office buildings, it has gradually be going up. And I understand that, some companies has been slowly relaxing their work from home policy. And I think, as after, now it has been like 8 months already, quite a lot of people actually, they want to go back to work. It's just like, in my own office, that we have been working from home since the third wave, with alternate team. But actually, some team requested that can we all go back to work because actually I think human interaction is necessary and working from home is not going to be a permanent solution. No matter like what kind of job function it is, I think human is it's designed to have like interaction between each other, but not like you just work at your own home and stuck at their own hole and communicate through electronically. I think that doesn't exactly work. It can work on some like very fundamental requirement of the business, but if you want like say creativity, if you want brainstorming, if you want strategic thinking, I think all these needs to be discussed like in person, and I think interactive discussion is very, very important.
So have you come across any startup company and then they really just maybe adopt work from home permanently?
I haven't come across, but I've heard from some of the co-working space operator that even though one of the tech company very high profile and say that, oh, we'll permanently work from home, but still, actually, they still buy a co-working space membership so that they can use all the office facilities for like meeting rooms or like maybe sometimes use the event space. So I would say that, a physical meeting or the use of the physical office space, they could be very high profile saying that entirely work from home permanently, but still, they still need the space.
Oh, okay, I see. So although Hong Kong's investment, the investment volume, which is on the downward trend. So, but in China, there is a different story. And there's a data just showing about the second quarter of the property investments in China. It jumped more than 90% in the second quarter, and it outperformed about the 9 countries in the Asia. So, and then Zhang Ping, and then can you tell us why China is so popular among the other Asian countries?
Well, yes, you are right. The real estate investment momentum in China is actually much more resilient than the market has been expecting. There are several reasons behind. First is definitely because the government has actually got the COVID-19 situation under better control since much earlier than the other region, right? We have got the business to normalize or gradually normalize since end of April. And so that means like that offered at least the environment for the overall construction activities to resume. And secondly is that for the specific to the property sector, we do have like the driver from the release of pent-up demand, which had actually been accumulated in the first quarter of this year. And thirdly is actually about the expectation on the potential home price growth momentum, because globally we have like the monetary easing to support the economy, and in China, the government also loosened the monetary policy as according from like or telling from their past experience, past cycles, as long as we have like the liquidity easing, then this will translate into the driver for the potential home price rally. So with such kind of like the expectation, I think that this actually drive the release of some of the investment, or not that speculative, but the investment demand on the ground. I mean, for the home purchasing demand side. And fourthly, because of the liquidity easing policies in the broader economy, the developers' cash flow position has actually strengthened, especially from the financing side, like the grant of construction loans and also the issuance of the domestic bond, something like that. So when developers has like the financial position strengthened, and also they expect the uptick on the home purchasing demand, this will translate into more active land acquisition activities in the land market, as you can tell from recent, or at least the momentum from April to July, before the government stepped to introduce some of the tightening measures. So all these four drivers has actually been driving the stronger than the other peers' real estate investment momentum.
So, Alan, do you think about that the Greater Bay Area will just offer very good opportunities for the foreign investor? Because right now the total populations of the Greater Bay Area will be more than 70 million.
Yeah, I think there are definitely a lot of potential in that area. If you compare that with Shanghai, right? I think it's less penetrated by institutional capital so far. And there's a lot that can be developed. You know, I think this time around, we've seen pretty moderate stimulus measures in terms of massive build out in general across the country, across China, compared to previous cycles and downturns. But there have been particularly more targeted infrastructure build out in Greater Bay Area, right? So it's not across the entire country, but you know, there are rollouts of more metro railways to increase connectivity across cities in that region. And once, you know, this typical China fashion, right? One is connected, it spurs development along the network, initially in residential developments and all kinds of developments, right? Of more infrastructure, and business gets accelerated. So I think there is a lot of built out plans and support from the administration. And as such, it will spur all kinds of economic activities.
So Donald, and then will China Camps also interested in expanding into the Greater Bay Area?
Yes, I mean Greater Bay Area definitely is one of our interest area to expand our business, and it is not only in real estate, but hopefully we can also incorporate other like assets operation as well. Again, I think the 17 million populations in the region, it is supported by a central government policy, and in the near term, obviously the monetary stimulus is going to continue, and the recovery of the mainland economy, we are quite confident that it will be one of the fastest in the world. Again, I think this year we probably will see 2.5% of GDP growth, and hopefully, that growth rate will increase in 2021. So we see this as a good opportunity for us to invest in the regional economy.
So, and then in what sector you think that the GBA will be just most attractive to China Camp?
Well, we are looking at, again, kind of a new type of industrial estates where we can, bring in new technologies and maybe become the conduit of, the world knowledge as well as the GBA advantage in the manufacturing business. we don't see we have a particular edge at residential development just because, the established developers in the Greater Bay Area, their scales and speed of construction, they are well ahead of us. So I think we need to add value in whatever we do. When we go into the GBA, we cannot just follow our existing traditional development model.
So Ada will champion with also interested in expand there because like the language, they also just invest in Beijing office and in other UK office sector. And any plan for the champion with?
Yes, we did. Yeah, we have been looking at Greater Bay Area for quite a bit of time. I think Greater Bay Area is definitely very, very attractive, especially, the growth potential, the vibrancy. I think, once, we connected the entire Greater Bay Area, as Donald said, there's like 70 million of people in this area. So no matter it's like, office or retail, I think, there are huge potential in the entire Greater Bay Area. I think one limitation is just that it is very hard for Hong Kong landlord to acquire, especially, if I'm looking at office, it's very hard to acquire any en-bloc building in Greater Bay Area at a decent yield that would be yield accretive. I think everyone sees that Greater Bay Area has such a huge potential. So most of the seller are not really willing to sell, but actually the rent hasn't really catch up yet. So actually the yield for the Greater Bay Area, especially for Shenzhen and Guangzhou, those yields are actually just as tight as Hong Kong.
Okay, I see. So Clark.
Yeah, hi. Thanks, Andy. Hi. Yeah, Clark back here. So now it's time for some audience Q&A. Just want to remind the audience, if you want to submit any questions, we still have a bit of time to do so. The first question I'll pose, it's same thing themed around the Greater Bay Area. This comes from Selena M. What are the problems and restrictions on Hong Kong residents when it comes to purchasing properties in the Greater Bay Area? And what might be the hurdles when it comes to transferring money back to Hong Kong when the property is sold? Jianping, do you have a response to that?
Well, I think that it is a bit more transparent for the Hong Kong residents to buy properties in the Greater Bay Area, as long as you can prove that the money you used to buy property is actually, if you like the transit money from Hong Kong to mainland China and you keep the record in the bank, you can prove that I did use the offshore money to buy properties onshore. Then when you sell the property, after you clear the tax, then you can actually get the money back to Hong Kong.
Okay, does anyone else have that's okay. Anyone else have a comment when it comes to just the restrictions and hurdles when it might come to purchasing in the Greater Bay Area from Hong Kong?
Yeah, I think depend on the city itself. There are some restrictions. If you are not a resident, you may not be able to purchase a home, or you haven't paid taxes, and it will become an issue. But I think in the Greater Bay Area, there are lots of second-tier cities that you can invest in, and they have less restriction.
Okay, thanks. So another question here from Anthony Liu. When it comes to Hong Kong retail landlords, what are the signifiers that make you feel that they are well prepared for ongoing threats, be it e-commerce, changing markets, COVID-19, etc., and why, and what can we learn from this? Let's start with Ada for this one.
Well, I think for Hong Kong landlords, everyone is very well prepared. If I'm just looking at the response to COVID, everyone is adding on a lot of hygiene measures and also helping the tenants as well. That I think pretty much every single major landlord has launched this discounted sales program, and I think that's why it lured a lot of people to get into the physical malls, not only in our malls but in every single malls in Hong Kong, to shop and to spend. E-commerce wise, yes, I think most of the landlords actually adopt, say for example for Langham Place that we run. we have launched a e-store, and then we have already sold the first set batch of e-coupons, and we are launching the second batch of e-coupons to tap all this pent-up demand from from the third wave of lockdown. So I would just say pretty much Hong Kong people are very, very agile and reacting to this whole situation very quickly.
Thanks. And Ellen, what are your thoughts from the investor point of view? What makes you think a landlord is being well prepared?
I think obviously it's quite situational, and Hong Kong is very different from most of the markets that we're active in. I think it's Hong Kong is probably the most prepped markets, and to Ada's point, we have gone through this before in SARS once, and these are very professional managers, so amongst the most prepped already.
Thanks, Jianping. What are your thoughts?
I think that we have got the COVID-19 situation for 8 months, and if you look at the specific properties, most of the landlord have already do some of the tenant restructuring to capture the more of the local demand, more of the local consumptions. So I think we do see some positive progress so far.
All right, and Donald, from your perspective as a landlord, what at Chinachem, what if you could offer some insight just as to I guess thought processes in recent months moving forward.
Well, I think Hong Kong landlords in general, they are very resilient and flexible. So we have come out of this crisis not too badly. But I think it also begs the questions of a fundamental kind of a change in our tenants mix. I think we are much more aware of the need of diversity in our tenants mix. So we don't want to concentrate, having a mall just have, the cater for mainland shoppers, for example, all the jewelry store and so on. So we are trying to have a much more inclusive and diversification in our mall now.
Thanks. Okay, this next question comes from Josh Tung. Which Chinese cities are possible or have less restriction for foreign retail investors for the residential market and a better model to enter, i.e. setting up a company? Jianping, your thoughts on that? Sounding a bit off at the moment. Can you try reconnecting your microphone? Maybe we can go to one of the other panelists. Ellen, do you have a perspective on that question?
Yeah, so in general, from my understanding, most of the tier 1 cities, which are the most popular destinations for retail investors, called Beijing, Shanghai, they have still pretty stringent regulations for foreign non-local residents to buy properties. So if we're talking about the ease for a Hong Kong resident to buy, I think it's still in the Guangdong province, where there are specific rules to encourage connectivity with Hong Kong. And I know Shenzhen has released some rules compared to 5 years ago. You can actually buy with less restrictions. Not as sort of equipped in the specific rules for each place, such as Dongguan, Huizhou, so on and so forth. But in general, I think overarchingly, it's probably fair to say around the Greater Bay Area, there's more flexibility for Hong Kong people to buy.
Okay, Jianping, do you want to try it one more time, see if it's working now?
Well, I think that I agree with Alan, because that if you want to buy properties in mainland China, I think that the infrastructure or in terms of the laws or regulations, it is much more transparent in the top tier cities. And for the Greater Bay Area, I think that the policy is actually much more flexible than that other cities. So the Greater Bay Area will actually pop up as our most preferred region.
Okay, Donald, what do you think about that?
Well, obviously, I think it can depend on the business and investment. You may also have the option of setting kind of a representative office rather than wholly foreign-owned enterprise as a vehicle. But I do agree, with Jim King and others that, Greater Bay Area in general does offer more flexibility in terms of business operation.
Okay, Ada, any thoughts on the Champion REIT side of things for that?
Well, yeah, I think, it's just the same as what, everyone has been talking about. I think China definitely, it will have a superior growth. It will have the highest growth among all countries all over the world. Then I think, just no brainer that everyone should be focusing on, investing in China, especially the Greater Bay Area. And I think, for all the tier one cities, I think, there has been so many foreign monies in these cities already, and I think all the regulations and stuff, they are pretty civilized.
Okay, thanks. So we have a question that's being pointed directly at Donald for this one from Emil Wong. Donald, would you mind sharing your view / outlook on Hong Kong residential?
Well, I think Hong Kong residential, I am quite optimistic in the mid to long term. And obviously, there will be uncertainty and turbulence in the short term, depend on the COVID, the China-US relations, as well as our social unrest and election and so on. But if you look at, purely from economic and supply and demand side, I think, the demand is going to outstrip the supply for a while, and it actually reflected even at this market. If you look at the recent first-hand sales, I think they are selling very well, and also as quite solid, robust price. So again, also another, I think, consideration is that Hong Kong as a city, we are experiencing double aging. In terms of double aging, it's not only the population but our buildings, residential buildings. A lot of them are getting old, and they need to redevelop or refurbish in a big way. So, I mean, it will add to the demand of quality residential units in Hong Kong.
Thanks, Donald. All right, so we are quickly running out of time here. So I think we just have time for this one final question. So we'd like to hear everyone's perspectives on this. Maybe we can start with Ellen here to begin. But the panel brought up the Greater Bay Area. Assuming it becomes a successful initiative, what does that mean for Hong Kong? Could it result in the relaxing of valuations and prices in Hong Kong? How would it impact the overall competitiveness of the real estate sector?
Look, that's a big question. I actually think that I'm fairly positive. To take a step back, I think a lot of the events in the past 6 months and the changes has removed some overhang in the uncertainty for our city. And the further integration depends on how it's done. A lot of it, obviously, how it's going to be executed. But the macro backdrop makes a lot of sense and carries a lot of potential. So if Hong Kong plays its cards right, I think it will benefit from more integration than less integration with Greater Bay Area.
Ada?
Well, I think Hong Kong's positioning in the Greater Bay Area is very clear, right? Hong Kong will be the international finance hub for the Greater Bay Area. And just by looking at the wave of the US IPOs coming back to Hong Kong for listings, this is definitely a plus, and this will fuel the Hong Kong economy, because I think each of the Greater Bay Area cities will have its own, identity and its own function. And as long as each cities perform in its own way, then I think the synergies that generated among all the cities in the Greater Bay Area is humongous. And I think this will only help each other to have the entire real estate market to grow, because I think once your economy grow, then your real estate market will grow accordingly.
And Donald?
No, I think the Greater Bay Area economy, they are ranking, I think, 10 or 11 in the world. So, there are a lot of opportunities, and I don't see, Hong Kong will diminish his role in this region or his importance in terms of a financial center and, secure funding for all the investment and infrastructure projects in the region. So I see a bright future. The thing that we need to do is really to define ourselves and, speed up our integration with the Greater Bay Area.
And finally, Jianping, your thoughts.
Thank you. I think that there will be some competition from the mainland cities versus Hong Kong, but this is actually much more short-term and very minor. From a relatively longer-term perspective, I think Hong Kong will be we see actually more opportunities for Hong Kong's development, and the better integration into the Greater Bay Area can enable Hong Kong to better capitalize the huge size of the market, which consists of 1.4 billion of population. So I think that we do see more outcomes or benefits from the rising integration here.
Thanks, Jianping. So that is all the time that we have. So thank you so much to all of our panelists, Jianping, Ada, Donald, and Ellen, for sharing your time and thoughts. We very much appreciate you guys doing that for us. And of course, thank you to Sandy for her excellent moderation as well. And lastly, a big thank you to Credit Suisse for sponsoring this entire series. Just want to inform our audience, you can be sure to subscribe and watch the replays of all of the segments from this series through our YouTube channel by searching for SCMP Events and Conferences. Again, thank you all for watching. We hope you enjoyed the discussion, and we look forward to welcoming you next time. Thanks.